Hey everyone, Dan here. I wanted to take some time today to talk about how you can draw some of these magnetic zones like on the charts and the videos that I share. And so let's get right to it. I don't have a way to prove this, but I promise you, I scrolled back in time. We are in August, I guess late July to August. I guess this would have been 2020. And this is AMD on the 1 hour chart. So I honestly don't know if, what we identify here as magnetic zones or price targets is going to hold up as we scroll to the right. So it'll be a surprise for all of us, but we'll see. But I wanted to kind of teach you what it is that we're seeing and how it is that I'm drawing these levels and these zones. First thing that we should cover is the candlestick in and of itself. Just what is the candlestick? And we have a couple of really big candlesticks here, so I'll use those as good highlights. So this enormous candlestick right here, the green candlestick means that the price during that interval of time, which again, this is a 1 hour chart. Oh, I didn't mean to do that. This is a 1 hour chart. So we are saying that this candlestick represents all of the price action over the course of that hour. And in this instance, it was on August 4th at 10:30 in the morning. So again, the market opens at 9:30, so you'd have a 9:30 to 10:30 hour, and you'd have a 10:30 to 11:30 hour, so on and so forth. So if it's a green candle, then that means that the price opened at a lower level than it closed. So it closed higher at 10:30 than it opened at 9:30, if that makes sense. And the levels that you're seeing here, this solid level here means this is where it opened. And then this solid, where the solid part ends up here, is where it closed. Okay, so obviously that's why it's green. It rose up significantly from like 78 to 82. This skinny line here that is jutting out from the top is called the wick. The wick indicates the highest point at which any shares traded during that time frame. And so shares were trading up over $83, but then they came back down and closed at this 82, 86 level. So the wicks show you sort of the full extent of all trading that happened during that interval, but the body of the candle itself represents the open and the close. So if we look at the very next candlestick, this is a very small candle compared to the one previous to it, and this means that the price, it's again green, so this means the price opened at the lowest part of the body and closed at the tallest part of the body. But it did, after it opened here, it did at some point stretch down all the way down here, but then people were buying the stock and pushed the price back up, okay, and it closed right here. So that's a green candlestick. Red candlestick, we'll look at this big one over here as an example. Red candlestick means that it closed lower than it opened, and so in this instance, it opened here where the body's the highest point at the body, and it closed the lowest part of the body, and it stretched all the way down here at one point, and it had risen up a little bit to here at one point during the interval. So hopefully that makes sense. If not, just rewatch these first few minutes a couple of times and let me know what questions you have in the comments. We can definitely try to answer some things there as well. So after we sort of know what the candles represent, what we look for is areas where there is a lot of price action that is lining up with each other. And what I mean by that, let me draw some sort of rectangles here. Like the body of this candle, the body of this candle, and the body of this candle, they all basically line up with each other, meaning the top of this one lines up with the bottom of this one, and the top of this one lines up with the bottom of this one. That means that this area is likely pretty magnetic. There's a lot of action there that means something. In this case, this meant that it was continuing this strong bull run that AMD was on. And again, the way that manifests is it came up this candle and tried to push up here, and it got sold off. And then it opened here, and it tried to sell off, and it got pushed up to here. Everyone bought up those those shares that were being sold down here. So it pushed the price up again. It opened here and it took off because there was all of this buying pressure that was happening. And so that's why that is an important zone. That's an area where there's been previous strong activities that have sort of major indicators of price action. In this instance, it was bullish action. Another thing to look for is an area where a lot of bottoming out is happening. So let me see if there's an example here. This is one these always stand out to me. This is called a double bottom. So you have two candlesticks here, and they are side by side, and it went, this one opened here and closed here, and then this one opened here and closed here. So that's called a double bottom, and that means twice over the course of, since this is the hour chart, over the course of those 2 hours, the price tried to sell below that level, but it got bought up every single time and pushed the price higher. Okay, that's often an indication that there is some good, buying pressure in the market. So I would pay attention to that level. There's another one of them here. Oh, where did I see it? There's another one of them here. This is sort of interesting because there's 3 things happening there. These smaller candles, if this lined up with something else, which again, if you just hover your mouse over the area, it'll kind of draw this dotted line through the entire left to right for you. So you can see if anything else is lining up. If there was something else significant that lined up with these tiny candles, I would potentially put a level here, but the tiny candles often aren't, super strong indicators. This one over here does line up with it, and I consider the bodies or the wicks depending on the setup. So just because the bottom of the body lines up, with this level, I would consider it a touch point. The more that I look at it now, there are sort of a lot of things lining up. So let's draw a horizontal line here because there might be something happening here. And what I just saw was, this one that we talked about, and then these like 2 or 3 candles here tried to come down and touch that level, and they got bought up, and it was basically moving sideways, but they didn't dip below it. And then that same sort of thing actually happened over here as well. So there, there's a little bit of something there. It might not be the most profound level, but there's something happening there. And then this is basically what I do. I just look for bottoms where there looks like there's a lot of bottoms, and see what the cursor sort of shows when I look left to right. And here I see pretty solid candles. I don't mean to keep changing the size of the chart here, sorry. This bottom one also hits this top one, basically hits this top one as well. There's a lot of activity here, actually. This is a pretty good one. It's a pretty good level. Okay, bottom, top, top, bottom, 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 bottom. If it also goes through the body of some other candlesticks, like, don't worry about it. Just because there's a magnetic level here doesn't mean that the price action can't blow through it. But what we see in reality here is, if we do consider this a magnetic zone, the price action does keep getting drawn to it, right? So obviously it had this huge rally up, and it blew through this zone, but then it got drawn back down to it. And then it tried to push off of it again, and it got drawn down to it. Tried to push off it again, and it got drawn down to it. The more times that it gets drawn down to it, and it can't surpass previous highs, which is what you see here. So this got drawn down to it, but it established essentially what we could consider a double top here. It pushed into a double top, which means there was this top, and there was a very recent top that was at the same level. That's not a good sign if you're a bull. So again, it tried to push off, it hit this top, came back down to the magnetic zone, tried to push off it again, hit the double top, and now you should be a little bit concerned if it can't break through this level and establish it as support. And again, if the price is above, then it's considered resistance. If the price is below, it's considered support. And so once it bounced off here again, this should have been a pretty strong indicator of nothing great is about to happen here. So when return to this magnetic zone again. That's what the magnetic zone does, so not shocking. And then here, this top, this is not a magnetic zone, so I'm not going to draw something around it. But if you were watching this in real time, what you should have seen, or what should have occurred to you, was you had double top, slightly higher high, but then it dropped down immediately and could not make another higher high after dropping down. That's a bad sign. Double top, slightly higher high, return to your magnetic zone, and then couldn't make a higher high. It made a lower high. So this should indicate that it's going to drop, which it did. And so that's sort of what you should have been analyzing and responding to in real time. Let me see what other levels there might be around here. Again, I'm just sort of like looking at, right here, I'm lining up these bottoms and seeing if there's anything interesting happening there. I mean, this is a big consolidation zone, obviously. So there's several tops and bottoms happening in this like entire area here. And there is always something to the zone that something was in before it had just an immaculate jump up. So we could select maybe something that captures most of the tops and bottoms here. I think that's probably a fair level. And so this is what I would draw, in this chart if I was doing it, in real time, essentially. I don't know that there's this level 2 I would probably place because there's all of these bottoms, and then it lines up with this magnetic zone too. So I do think that there's probably something there. So, if I was analyzing this, here's where I would say this zone is our bottom magnetic zone, the 77.63. If the price drops below that and you are still holding, or if you're looking to get in, we should want the price action to establish or reestablish it really quickly as support. And if it can, then we can jump off of that and start moving back toward our higher ranges. And because this was such an extreme sell-off in terms of like how quickly it happened, sometimes you can reestablish back through those pretty quickly because there's not a ton of resistance happening between this blue level here, 77.65 level, and this 83. So, that $6 range or so there's not a ton that would, make me think like, ooh, it's going to get stuck there for a little bit. Yeah. So that's how I would draw them. That's how I would analyze it if I was doing this for you guys and, this hadn't already happened. So let's scroll to the right, see what happens, see if any of this stuff held up or if I've just spent the last 15 minutes wasting my time on a video that doesn't pan out. Let's see. Okay. So essentially what we just talked about happened here. It dipped below, and then it didn't dip like really far below, right? It's around 76, 70, high 76 level. And then it pretty quickly like bumped its head against this a few times, but then was able to get over and establish this as support. That's what this is. When I say, it turns it from resistance to support, this is what I'm talking about. It fell below it. It immediately tried to test that price again, and it was resisting, meaning it couldn't break over that price. But when it did, it tested it again, which is really normal, and it wouldn't fall below it. Now it's called support, okay? And then we had this, essentially what I had just sort of hypothesized might happen, with this incredibly fast sell-off, was this incredibly fast run up. So reestablishing this level of support, which stretched back all the way to here, was important for AMD to be able to push off and return to its bull run that it had been having before. And it came up, and just as we had identified this level because of this action here and this action here, and just sort of seeing, what horizontal line or what price would cut through the most important parts of that, which again, the most important parts are like this corner right here and these double bottoms right here. Look what happened. Shot up, and it found this point of resistance, and it kept hitting it as resistance, kept hitting it as resistance. And look, it has all of this essentially, there's a little bit of up and down, but it's essentially sideways action between these first two magnetic points that we drew. This is exactly what we'd be looking for. So we were looking at the chart down here, beginning of August, so this is now late August. And it never reaches back down here, which is a good sign if you're in this play and looking for it to run up. And it came here, and it does a little bit of consolidating here, but it actually blows through that pretty well, starts hitting the resistance here on this price target that we drew, but rises above it, establishes it as support. I would have been feeling really good at that until it hit this double top. You see this double top right here? Again, look out for the double tops. They can result in some tragedy. And sometimes it's quick tragedy. Sometimes it's more long-lasting. But it did push it down, and it returned to our magnetic zone of that 83.17. And what did it do? It fell below it, resisted, established above it, and it said, oh, here's some support again. Oh, I can jump over this level again. And hit some resistance here, developed it as support. I mean, this is incredible. Actually, this is a really good example of the hypothesis of how we draw these charts working. Because it would have been hitting and consolidating and moving from resistance to support on all the levels that we would have drawn weeks before. We're now about, 3 weeks after, 3 to 4 weeks after the price action that we were looking at when we drew these levels. And look what happens here. This magnetic zone that we draw, it came up here, resisted. It hit a double top here, and it got pushed down. Where did it return to? This 83.17 support zone. This is a really good example. And then there was probably some catalyst or something, and it shot up. And this is where you would obviously, at this point when it's reaching your upper price targets, whenever it had developed support at 84.69, which is our next to last zone that we had drawn, you should do a new analysis and figure out, what should you be looking at from here. That may have given you indicators of how to, handle this rocket ship up. It may not have, who knows. But as this is approaching either your highest or your lowest price targets in the charts that you've drawn, you should go ahead and reevaluate them so that you can extend it higher or lower and try to figure out where the stock's going to go from there. So this is AMD case study. Hopefully that made sense. Hopefully it helped. Again, we charted from July 31st through, I think we were here, through August 11th of 2020. And then our zones were really spot on all the way through, this established as support, so that would make sense, all the way through August 31st. So a full month on the hour-long chart. So if you guys enjoyed this video, please like and subscribe. I will keep, putting out explainer videos and videos on particular tickers as well. And you can follow me on Twitter at Dan_Coyle. But mostly right now, the likes and subscribes help the most, so I appreciate it. And I will see you all in the next video.